Hi, everyone. Welcome to Unconfirmed, the podcast that reveals how the marquee names in crypto are reacting to the week's top headlines and gets the inside scoop on what they see on the horizon. I'm your host, Laura Shin. If you aren't receiving my weekly email newsletter, go to unchainedpodcast.com to sign up. And don't forget that Unchained and Unconfirmed are now on YouTube. You can go subscribe there to be alerted to all the latest episodes of both podcasts.
CipherTrace cutting-edge cryptocurrency intelligence powers anti-money laundering, blockchain analytics, and threat intel. Leading exchanges, virtual currency businesses, banks, and regulators themselves use CipherTrace to comply with regulation and to monitor compliance.
For a lot of crypto fans, it's hard to find one place where you can trade, plan, and discuss crypto strategy. Get started with eToro and the world's #1 social trading platform. Today's guest is Nick Tomaino, General Partner of UNCONFIRMED. Welcome, Nick.
How's it going?
You just raised a $45 million fund, your second, with your first fund raising $26 million and launching all the way back in August 2017, which was the year of cryptomania. What was it like trying to raise in this market versus in 2017?
Yeah, it was much more difficult, I'd say. You know, in 2017, I think most investors had FOMO. They had seen a massive rise in prices. And, if you could get in front of family offices or individuals, mostly not institutions in 2017, but there was a lot of demand for people that just wanted exposure to crypto because of FOMO. So I would say it was really easy in 2017 to raise, and it was much more difficult this time around, although I did have strong support from my existing LP base, which I really benefited from. So I think if I had to raise from a completely new base of investors, it would have been, even more difficult. But I did have a really strong group of initial investors that kind of saw what I've done over the past 2 years, and I basically kind of executed how I said I was going to execute. And I think they were generally happy with, my communication and the signs in the portfolio so far. So I got a lot of support there. But yeah, definitely a different environment.
And were the types of LPs different, like in terms of kind of the interest of the type of investor?
Yes. Much more. I would say Fund 2 is larger LP types of LPs, right? So for my first fund, I had a much lower minimum and a higher number, and more individuals and things like that. Fund 2 is a few fund of funds and some family offices. So definitely more institutional, although not the big institutions. Not many of the big institutions. I think my general take from this fundraise was that it's still very early for most big institutions. So
what have you been investing in so far, and what will you focus on in this fund?
So Fund 1, our general thesis as a fund is invest in products that the crypto community wants and needs. And so I'm a crypto native user. I got involved in the space. I was one of the first 100 or so users of Coinbase, and then started working at Coinbase. So I'm just kind of always, trying new crypto products, and think I have, a good feel for the crypto kind of community. And so that's really what I focus on. There's a lot of VCs out there that want to see blockchains applied to supply chains or to bank-to-bank transfers or things kind of outside of crypto. And that stuff may work, but I don't have a really good feel for that stuff. It's kind of out of my comfort zone and expertise. And I think what I have a good feel for is kind of this crypto native stuff. So that's very much what what we like to invest in, these products that are solving problems for the crypto community. And I think within the crypto community, there's two types of users. There's the crypto believer, and there's a developer. And so if you look at our existing portfolio, pretty much everything that we've invested in is solving a problem for those two types of end users.
So I totally understand why that's your focus and, how that also plays to your strength. But one thing I would say is that I feel like what we're seeing, at least this year, is that the companies and organizations that are interested in crypto have branched out quite a bit since 2017. Here we've got like Facebook trying to launch its own stablecoin, and this week Bakkt, which has the backing of the Intercontinental Exchange, Starbucks, Microsoft's venture arm, etc. They launched their futures product, and we even had the Bank of England governor proposing a global digital currency. So what do you make of those developments? And I mean, it sounds like it hasn't really affected your investment thesis, but I'm curious to know what impact you think those things will have on the crypto space.
Yeah, well, I love to see that stuff, to be clear. I think that's all very positive for, for the cryptocurrency ecosystem and kind of, gaining more understanding and acceptance from the mainstream. But I would say I'm pretty skeptical of kind of large institutions launching cryptocurrency initiatives that really impact the space in a meaningful way in the long term. And there's a few reasons for that. But generally speaking, I think, the public, first and foremost, and the media also kind of overestimates the importance of institutional, projects, and kind of underestimates the importance of, small teams that are working on completely new ideas. So, we can get into any of those projects in particular, but generally speaking, I think, my belief is that this, cryptocurrency movement is very much a grassroots kind of bottoms up movement that's at the end of the day very disruptive to large institutions. And that's why I think innovators' dilemma and lack of focus are kind of two major hurdles that, that any institutional project, whether it's Facebook or, Bakkt or things like that, are going to be up against.
Well, so yeah, why don't you dive into a little bit? Like maybe let's talk about Libra, since I feel like that's kind of the one that has the most mind share out in like the mainstream world. What's your take on kind of how that will play out and what impact it will have on crypto?
I don't have a strong feeling on how it will play out, I guess, other than, I'm skeptical that it's going to be very meaningful in the long run, I guess. So look, I understand why people are excited about it. I mean, Facebook has several billion users, and the idea of putting crypto in the hands of, billions of Facebook users is very exciting. We could get into the tactics of kind of why I think there's a lot of hurdles to what they're doing. But at the end of the day, how I think about this is, the best crypto minds are not going to work at Facebook to work on a cryptocurrency initiative, right? They're doing their own thing. Economic incentives have a lot to do with that. And I think clearly, Zuckerberg's talking about it, and it is top of mind in some sense from the very top at Facebook. But I'm just deeply skeptical that they're going to pull something really meaningful long run off. And if you look at most of their materials, a lot of it is kind of very much a derivative of Ethereum and kind of existing crypto projects. And so, the whole concept of Libra to me kind of feels like a poor man's MakerDAO. So happy to dive into specifics, but I guess that's my general sentiment on Libra.
All right. Well, why don't we dive into deeper details in a moment? But first, a quick word from the sponsors who make this show possible. eToro gives you access to the most popular crypto assets on the market, and its virtual trading and discussion features let you discuss and test trading strategies with a community of over 11 million other traders. And headline news, they have officially launched in the USA. eToro offers the smartest trading tools and the ability to connect with the best traders around the world. Their trading fees are transparent and exceedingly low, too, and it's available in one easy-to-use app. Get started at eToro.com. That's ETORO.com and build your crypto portfolio the smart way today.
Will the world follow France and advocate banning privacy coins? Will government-backed stablecoins become the new fiat? Are distributed and peer-to-peer exchanges just a flash in the pan? The answer is maybe. Virtual currencies can flourish and create a new, private, and more versatile economy. But that grand vision can't happen without keeping crypto clean. And that requires support of governments and accountability for bad actors. Privacy-enhanced compliance using cryptographic controls has the potential to preserve anonymity without compromising legitimate investigations. CipherTrace is working on this vision of the future. Sign up to stay up to date on the Privacy-Enhanced Compliance Initiative and receive authoritative crypto AML reports quarterly. www.ciphertrace.com/keepcryptoclean.
Back to my conversation with Nick Tomaino. So if you're, not thinking that Libra will end up being super impactful, then, what do you think will kind of be maybe the really big way that people end up using this technology, like in a more mainstream fashion?
So I think, in 2019, there's one clear use case for crypto, which is speculation. And that's arguably now, a mainstream use case. And I think, there's going to be ebbs and flows, but it's likely that we're still in kind of the relatively early innings of that use case. And so, that's my base assumption is that speculation is going to continue to grow as a use case in crypto. There's a lot of people out there that say, well, look, the speculation is all a bubble, and there's got to be real use cases beyond speculation underlying it. But I think that's a very kind of U.S. centric view of the world. And if you look at a whole bunch of countries around the world and you spend time in those places, you realize that there are people in those countries that may not have the ability to invest in public market equities like we do in the U.S., or may not even have bank accounts. And so, crypto very much represents a new investable opportunity for a lot of people in the world. And I think that use case is going to grow. Beyond speculation, my kind of gut is that the next potentially really interesting mainstream use case could be saving. And, saving meaning, interest-bearing accounts in crypto. And, if you look at negative interest rates policies around the world, and even in the U.S., if you have $10,000 in a savings account, you can get maybe 2% on that right now. And we're starting to see products on top of Ethereum that are giving better savings opportunities to people. And of course, it's still very early. It's unclear where the rates will end up long term, and there's challenges for people to get into crypto still. But I'm very excited about things like Compound and DYDX and Uniswap that are giving people around the world new savings opportunities and kind of interest-bearing savings opportunities. So that's a use case that I think is could be the next catalyst to get millions of users into crypto.
Yeah, I agree with you that all those projects are pretty interesting. I've actually had them all on either Unchained or Unconfirmed, so I'll link to those in the show notes. But so that in general, it sounds like maybe DeFi is what's interesting to you. And so aside from like maybe the savings use case, are there any other trends in DeFi that have piqued your interest?
Sure. I mean, savings is in some sense on the back of stablecoins, right? And like for Fund One, we made some early bets in stablecoins, and that was really a big focus for us. It continues to be. I mean, the need for stablecoins just kind of continues to grow, and I think if you look at it's no secret, MakerDAO is the most successful in many ways projects on top of Ethereum. So to
now
me,
Tether is Tether on Ethereum is now taking off.
True. Though I know Tether is technically on Ethereum, but no one in DeFi uses Tether. So I've never, I get back to how I think about the world, and maybe this is too narrow, but it's kind of what I think is like, do I use the products? And Tether is something that I've never used. Tether to me is kind of this, stablecoin that's used by traders on different exchanges and things like that. But Tether to me is not really DeFi.
You mean like it's not used on chain? Is that what you mean?
Exactly. Like if you look at decentralized exchanges, and Tether, I think is like the trading pair used on centralized exchanges like Binance and others. But if you look at kind of on-chain DeFi, decentralized exchanges, I don't believe, I could be wrong on this, but I don't think you'll see Tether high up the list. It's DAI and it's USDC.
What's your feeling about Ethereum scaling issues? Do you worry that could drive developers off into other crypto networks?
It's definitely a long-term concern, though. I think, my view is right now, Ethereum is working really well for high dollar value, low throughput type transactions, DeFi really, right? So, and there are, solutions that come before ETH 2.0 that can give you, some, scaling, right? And it maybe it's 5x or 10x and not 1,000x. But to me, the fact that transaction fees on Ethereum surpassed Bitcoin, and people are actually paying higher fees right now for Ethereum transactions is a really good sign. And I think there are a lot of tweaks to be made, like increasing the gas limit size, and implementing some layer 0 solutions such as Blocks Route that can get you relatively soon without these major protocol changes 5x or 10x, right? So
right. Although I did see this week that I guess there were because of like a scaling bottleneck, I guess that there was some point where the ETH price fell or something, and there was like a bunch of liquidations in MakerDAO CDPs, and they didn't go through kind of at the time that you would expect. And so I feel like that does cause some risk. I saw somebody tweeting about that. I'll put that in the show notes.
Yeah. I actually didn't see that, but that's interesting. It doesn't really surprise me. I think clearly, like anyone that's used Ethereum in the past week or so recognizes that there's been a bottleneck. And I did an Ethereum transaction the other day and paid $12, for a fee. And so, but what I'm saying is there are ways to get 10x say without major changes like ETH 2.0, right? And particularly, I mean, increasing the gas limit, which miners are starting to do, and I think that could continue. And increasing the gas limit, that comes with some trade-offs that you need to consider and things like that. So it's not quite that easy. But I'm, I guess, long-winded way of saying my view is that DeFi, high dollar value, low throughput stuff on Ethereum is working pretty well right now. But I think clearly for use cases beyond that, such as social networking apps or gaming apps or identity stuff or anything that requires kind of low dollar value but high throughput, Ethereum as it currently stands can't support that, right? So, and that's obviously a driving force behind why there's been such a big emphasis on ETH 2.0, which, I would say I'm cautiously optimistic on that, early 2020, we could start seeing some of the fruits of all the work that's being done there. But I also think there is an opportunity for other chains to capture some of those use cases that Ethereum isn't right now. And we've invested in a few of those. I would say, I think that's clearly been next gen blockchains has been kind of this meme that a lot of projects have just kind of way over marketed. And there's a lot of really bad projects that raised a lot of money from that meme. But I think there are, as is the case with most memes, they tend to get abused, but there is some kind of interesting stuff there too, and that's projects. The two in particular that we've invested in are Cosmos and Polkadot, which I think by my estimation are kind of the best the best combination of kind of this strong community and ethos combined with strong technology. And I think in order to really capture any of these use cases that we're talking about, I think you need both.
And out of curiosity, for both of those, obviously you would have the choice of investing either in the company such as Parity versus the network Polkadot, or the company Tendermint versus the network Cosmos. So how do you decide which one to do, and which did you do?
So in the case of the Cosmos network, we invested both in the company Tendermint behind the project and the token. In the case of Atoms, and in the case of Polkadot, we just invested in Dots. So I think there's a whole variety of considerations there. At the end of the day, though, I think what's most important is again, like incentive alignment. If how we think about it is, we don't really care if we're investing in a company or a token. We want kind of pure incentive alignment with the founders that are building the project. And I think, clearly 2017, there was way too much focus on tokens because it became this really hot thing you could raise a lot of money with. And in many cases, there wasn't pure incentive alignment with the investors and the founders, and that got into trouble. But I think as, how I think about, early stage investing is, if you could be, you're going to have success if you can align yourself from an incentive perspective with great founders. And that's, really how I think about it.
All right. Well, it's been great having you on the show. Thanks for coming on Unconfirmed.
Sure. That felt quick, but great to be on. And I'll talk to you soon.
Thanks so much for joining us today. To learn more about the topics we discussed, be sure to check out the links in the show notes of your podcast player. If you enjoyed this episode, be sure to share it on Facebook, Twitter, or LinkedIn. Unconfirmed is produced by me, Laura Shin, with help from Fractal Recording, Anthony Yoon, Daniel Nuss, Rich Stroffolino, and Josh Durham. Thanks for listening.